Housing is coming back, but look at this chart and you can see that the one thing that could smack it down is interest rates. Historically, when mortgage rates go down, housing rises up, but real estate analyst Jason Meister says rates are on their way up and that spells trouble for housing. Really?
Yeah, I mean, the Fed is tapering now, and as a result, the 10-year Treasury bond is on the rise. That forces mortgage rates to rise. When mortgage rates rises, then houses become more expensive.
That makes a lot of sense. Whenever I make that argument, though, folks on the other side say, well, they're still at historic lows, so it's not at the point that it's going to make a difference yet because mortgages are still so cheap. How do you respond to that?
I mean, I'm very concerned. The housing market has been propped up, just like the stock market's been propped up. We have a government that's intervened in the markets. We don't have the free market working. When the free market works, housing is robust. Look at the commercial real estate market. It recovered in 2010. We're talking about years housing market took to get a rebound. Now we're on the rebound, but mortgage rates are going to rise, and as a result, I think rental properties in commercial real estate are going to become more attractive.
Let's back up. Which part of the boom and bust do you blame the government for in this last cycle in residential housing? You think they were part of the whole entire problem?
I don't think they're the entire problem. I think that they're a significant portion of the problem. When you have things like the Home Affordable Modification Program, where President Obama and the government basically said that banks had to modify loans. So if you had a 6% mortgage and the banks had to modify it to 3%, but people couldn't afford the homes to begin with. So if you modify a loan from 6 to 3, you're just prolonging the pain. And so investors didn't see a capitulation, a bottom to the marketplace. When there's a bottom, investors swoop in and buy property.
So maybe it's a balance then that now interest rates are going up. It sort of takes some of that froth off.
Well, I think that there's an element of truth to that. I think that if we see, I mean, the Case-Shiller numbers came out on Tuesday at 9 a.m., and those numbers showed that there was an 11% increase year over year, which was the highest increase we've seen in 8 years. I think that if we see 2 to 4%, that's organic growth. We don't need artificial growth. We need organic growth that's healthy. And I think that in 2014 and 2015, we're going to see that organic growth, but we need to be careful and we need to be cautiously optimistic. I think that the tailwinds are much stronger than the headwinds, but I would be very cautiously optimistic.
At what point, I mean, what's the rate interest rates climb to when they become a real problem? When do you see people really getting out of the market and saying they're not going to buy?
You know, I think that it's hard to say. I think that if you have to look at people that are families that are beginning to buy homes. If they have to borrow against their 401k and they see a 700-point drop in the Dow, which you've seen this week, or not this week, but over the last couple of weeks, you know, that's hard for them to go and purchase a home. It's more expensive. It's an affordability issue.
Yeah. Inventory was a big driver of the story last year. Where does that stand now?
Well, inventory has tightened quite a bit, but I think that you also have to focus on how much foreign investment has pumped money into it. We had $8 billion just from the Chinese alone last year. So if we continue to see foreign investment...
Do you think we will?
I think we will. I think we'll see it in Miami. I think we'll see it in New York. I think we'll see it in LA. But, you know, that's not the whole country.
Yeah. What about the renters market? That was also a big story of what's driving things.
Yeah, I think that the renters market is going to, I think rents are going to continue to go up. I'm seeing it. I'm in commercial real estate. I'm seeing people buy, my clients are buying rental properties. Cap rates are compressed. People are buying rental properties because they know that the rents are going to continue to rise, because that's going to be more attractive because people aren't going to buy homes. They're going to need to rent. You can either own a home or you can rent a home.
Jason, thank you so much.
No problem.